Hi there, welcome to Grain TV. I'm Kevin McNew. It's Wednesday, August 17th, and it was an update in the markets. Let's take a look at Grain Edge's trading platform and see where we closed. In Chicago, beans continuing to lead to the upside, gaining 8 cents, although being up as much as 11 cents on new crop November bean futures. Corn was up 2 3/4, and wheat in Chicago holding flat, although Kansas City wheat did gain 5 cents as that spread becomes actively traded between Chicago and Kansas City wheat, with Kansas City starting to fight back and try and get a premium again against Chicago wheat. News today was pretty light. There was EIA information on crude oil and ethanol. We'll talk about the ethanol data in a moment. But in crude oil traders got a little more bullish input into the ever-increasing crude oil price. Stocks for the week were down 2.5 million barrels versus expectations of a build on the week of 500,000 barrels. So that was positive, and especially in light of last week's 1 million barrel build. So, traders had been trading down on crude oil after the big run up here in the last week. But on this news, we did actually manage to post higher prices going into the close. Other news out today, exporters reported another round of deals in China with 381,000 metric tons of beans being sold to China for new crop delivery. That continues to be the ongoing bullish input into the bean market. We continue to look at new deals being done with China, and that continues to drive bean prices higher. Although, continuing to drag on it is the potential for a good crop in soybeans, and especially as the Eastern Corn Belt gets some rain here later in the season to help keep those turn back the drought that they had early in the growing season. Other news: the Buenos Aires Grain Exchange said that they expect Argentinian farmers there to increase rapidly their corn acres next year. Last year they were at 3.6 million hectares. This year they expect farmers there to plant 4.5 million hectares. So that's a relatively big jump from our competitors to the south, and we'll see if that is in fact realized. Other news: the Fed meeting in July. Minutes from that meeting were announced, and many of the Fed policymakers are suggesting that we may need an interest rate increase as the economy heats up before the end of the year. So that will continue to be a story to watch. Let's take a look at EIA ethanol numbers. These were supportive, although the corn market, didn't do much action on this news. But we had a week of record high ethanol production, with production up 11,000 barrels per day, topping out at 1.03 million barrels, and stocks dropping by a small 35,000 barrel draw on a total stock figure of 20.4. So that was supportive for underlying corn demand. But, if we look at these charts here, we're continuing to sort of struggle as we get higher. Let's start first with November beans. And, we talked about this after we got out of the crop report. The first objective was in that 1006 area. We achieved that, and our next objective is getting closer at 1023. So that would sort of be the next upside resistance point. Today's close around 1015 certainly puts 1023 in the sights for tomorrow's trade. In corn, it's been a much slower and gradual increase off of those Friday lows from the crop report. We talked about 346 as the upside objective here. We traded today around 339 on the close on Dees corn. So, we are continuing to sort of inch higher, but I wouldn't expect us to catapult higher, although we might get some short covering if we reach some of these targets. Farmers, if you are still holding on to old crop corn, and I know there are a lot of farmers out there that are, this may be a time to start paying attention, because as we get into harvest, my suspicion is, as a lot of other analysts are, that we're going to be very, very tight on storage space. Storage space is going to be a huge premium. So anyone holding stocks, old crop stocks in particular, it may be time to start moving some grain, even though these prices may not be as favorable as we'd hoped in the middle part of the summer when prices were at $4. Certainly, the fundamentals are just, going to suggest we're going to have very, very big carryouts this year, which may put a limit on price behavior. That's all we've got for today. Tomorrow we'll be talking about the export sales report. Look for that in the morning. People are looking for about a 1.8 million metric ton soybean new crop deal or soybeans for new crop delivery in tomorrow morning's USDA report. So look for that as a key driver in the morning trade. That's all we've got today. As always, visit us online at grainhedge.com to learn how we can help you in your own grain marketing situation. As a GrainEdge trading client, you'll get our technical alerts email first thing every trading day. Technical alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by technical alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.